So this is today's trading, Tuesday's trading. We noted when tape reading, this was the journal liquidity. I will place some screenshots to indicate this because I couldn't record this video. I couldn't record the trade live because I was preoccupied with some other things. So sell side was our journal. This sell side was our journal liquidity because from the higher time frame, from yesterday's trading, we already rallied higher. So we did not expect price to make we expected a choppy price action. Using the concept of market structure, you can still trade a choppy price action if you must trade. I advise not to trade I advise not to trade after a rally in price action when price has moved above 40 to 50 handles the previous day's trading. That will indicate a choppy price action the next day's trading. So, but to illustrate this concept of market structure, I had to tape today's trading, and this is what we did. We noted this sell side liquidity here, and after noting sell side liquidity, this is the long-term high, and this was the long-term low. Let's label this. So here we have long-term high here, and here you have the long-term low. And here you have your long-term low. And now price chase higher to balance this imbalance which was created in price action here. This was the imbalance which was created. Don't worry about the wick. The wick is to do damage. The body tells you the story. You see, we are trading inside of this bearish order block, which coincides with this fair value gap here, which coincides with this imbalance here, which is this fair value gap. So when price trace up, this becomes the intermediate term high. Using the wick for, so this becomes the intermediate term high because this is the move that balanced this imbalance. If you remove the wick from this will be your intermediate term high, but we are using everything here, even if it is price action like this. So this is your intermediate term high. Like I said before, when price makes an intermediate term high, this is the second entry for people that miss this purge of sell side liquidity, of buy side liquidity. For traders that miss this purge of buy side liquidity, price will give them the second leg to enter, and a final call will be made, which will make the short term high or the short term low, which is what you have here. So this short term low, here you are, this short term high. So we had this short term high trace back inside of this imbalance here, and then we had lower prices here. So this is the business from the 1 minute time frame. So you see, you had a long-term high, a long-term low, an intermediate term high, which balances this imbalance. From the 1 minute time frame, the imbalance is not as clear here, but that is the imbalance from the 3 minute time frame we are working with. I'm just going lower to the 1 minute time frame to make it clearer. So this intermediate term high balanced this imbalance here. An intermediate term high is a high that balances an imbalance. So and an intermediate term high usually have two short-term highs at each side. You have this short-term high and this short-term high. Yeah, this is a short-term high, but you are not that viewing it in that view typically confuses traders that are yet to understand the concept of liquidity and imbalance. Because if you do not understand the concept of liquidity and imbalance, and I keep explaining to you that intermediate term high should typically have two short term highs between it, you now become focused on looking at price action as higher highs and lower lows, because you are looking at for short term highs. If you are looking for an intermediate term high to violate a short term high, but the the basic concept of an intermediate term high is to balance an imbalance. An intermediate term high is to rebalance an imbalance. Does that make sense? So this is the basic form of it. You have the long term high, you have the long term low, because your John liquidity is here, this sell side here. This is the sell side liquidity which you are targeting from the intraday. You are not trying to catch the long move because you're expecting a choppy price action for today's trading. So you will be nimble when trading after you have a rally in price action. So this is the business. I hope you got something from this, and I hope I tried to make it as clear as possible. Talk to you on the next video, and goodbye.